Main Capital Partners is a very differentiated investment firm with a full focus on B2B enterprise software companies. These are SaaS businesses, recurring businesses, where we take majority stakes and then we start building those groups by organic growth and by buy and build. We have 3 offices, 3 teams in 3 regions. So the buy and build strategy is both locally but also internationally. It's cross-border. We take a very active approach in building those firms, and the end goal is to build much larger software groups which are more valuable and well positioned for an exit if we start looking at that after a period of 3 to 5 years. The teams are very involved on the supervisory board level but also on management level to support management teams with their growth strategies, both organically by sharing experience of their business models and by active acquisitions. Buy and build strategies are extremely important for our portfolio companies and for Main. We have a good example, Roxit, a software group focusing on SaaS products for municipalities. We were able to acquire the company in 2015. We have been able to share a lot of experience about building successful software companies with them, and we started doing an active buy and build strategy. We did 5 add-on acquisitions. An important one was Brein case management systems, and we integrated them all in one platform, growing the business to, at the end of the day, 35 million in 2019 in revenues. And there was a lot of interest to buy this company, so we decided to do an organized sales process, and we were able to sell the company to Visma, a large software group owned by a big other private equity firm. We made a blended money multiple of close to 5 times our investment and a high IRR of close to 60% on an annual basis. So it was a big success for Main, and it's a good example of a local play that you build via organic growth and buy and build. We know that we can do it also internationally, and we have other examples of that. Well, the enterprise software market is a market that has been growing with a relatively high growth rate of over 7% over the last 60 years. And we expect that the software market will continue to grow. It's still a fragmented market with a lot of buy and build opportunities, and it also grows through the economic cycles. It's resilient, which makes it very attractive. It's also a very profitable industry, and because it's fragmented, there are a lot of deal opportunities for Main Capital Partners, and therefore we see lots of deal flow in our 3 regions, DACH, Nordics, and in the Benelux, and we see increased possibilities for cross-border add-on strategies. So we take platform investments in Benelux or in DACH, and then we move to flow in our 3 regions, DACH, Nordics, and in the Benelux, and we see increased possibilities for cross-border add-on strategies. So we take platform investment to other regions, so it's a land and expand strategy to build larger software groups. It's going forward probably going to consolidate further, and it creates great exit opportunities, of course, because if you build larger software groups, you have the possibility to sell those groups to large strategic buyers, often backed by even larger private equity firms, for example from the US or other international regions.